Hello, Maverick Currency traders. This is Rob Reinhold, and we are in the last week of May. We're going to close up the books on May at the end of this week. We'll take balances, do payouts, and then we're on to June. So let's go ahead and get started. In this session, we're going to go through the news of the week. We're going to talk about what happened. We're going to go through and score everything from a +3 to -3. And then, as always, we look for relative strength and pit it against relative weakness.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
So let's go ahead and start with equities this week. Equities had a pullback, and we had a bunch of things kind of hit this week that just wasn't as good. And then on Friday, we had President Trump come by and take this weak market and really just shoot it in the foot with new threats of tariffs. Tariffs on iPhones of 25%, and then 50% tariffs against the EU. Now look, hopefully everyone has gotten comfortable. If you didn't get comfortable with President Trump the first 4 years, hopefully you're getting into it now. This is what we had to deal with from 2017 to 2021. It's just unpredictability. And it can come from anywhere at any time, and they come from tweets. Just a random tweet in the first part of the morning sends the markets tumbling. This is what happens. And so at Maverick, we say trade the market in front of you. Fully accept the market conditions as they are right now. Fully accept it. Don't be mad at him if you don't like it. Don't be mad. It doesn't help you to be mad. Because then it's like, oh, he's doing it to me, or Jay Powell's doing it to me. No. Fully look at the situation and say, this is the market we're in. This is the market in front of me. How can I trade successfully in this market? And Uncle and I were talking earlier, and we talked about how we're getting daily movements, but we're not getting 3-day moves. We're not getting 5-day moves. We're not getting 3-week moves. That's not what we're getting. We have to trade the market in front of us. So equities pulled back, but we actually had a pretty bullish candle on Friday. We'll take a look at equities here. We did hear from the RBA. They cut rates by 25 basis points, but they cited global weakness, which means they're a little bit more dovish than the market thought. So the Aussie had a little rundown off that. And then cryptos, it didn't care. Cryptos did not care about anything. We had a breakout to new highs. We did have the Senate pass some new regulatory rules for crypto, which is really good. And Bitcoin broke out, but it settled down by the end of the week. Let's go ahead and just take a look at some of the other news this week. Canadian CPI came in higher than expected, which it really has kind of bucked the trend lately. The UK, much higher than expected. The pound is actually the strongest currency at the moment, and it's got the biggest inflation problem at the moment. And then down here on Friday, we got retail sales out of Canada and the UK, and they're both better than expected. So ultimately, the pound is looking quite good here based on its economic reports from last week. We take a look at all the markets here. Let's first go off of equities and some commodities. S&P was down 2%, world index 1%. Cryptos had a nice week. Gold had a great week. Oil flat on the week. Let's take a look at the S&P. I was talking to a trader just yesterday. And the trader came on with all of these fears and concerns. And what about, tariffs? What about this? What about this? And I said, look, one of my favorite questions to ask people. If you have been in a coma for the last 10 years, let's say the first thing you saw was me coming out of your coma of 10 years. You don't know what day it is. You don't know what year it is. You don't know who the president is. You don't know anything that's happened over the past 10 years. And I show you a chart. What should you do at this point? And if you take a look at this chart, it's very clear that we have bullish signs. We have a 2050 moving average cross. We have higher highs, higher lows. We've got some nice trend lines going up. We have a bullish market. Everything in this chart is bullish, and we just got a 3-day pullback back to a 20 period moving average where we should get some support. If you were in a coma and you didn't know anything else, you would think this was a great buying opportunity. A great buying opportunity. But we have all of these other things swirling around in our heads that cause us to pause because they're legitimate fears. But look, the market is a pricing mechanism. It's priced in all those fears, and it's decided this is the correct price for all of these fears that we're pricing in. Ankit, what's your call on equities here?
Hey Rob, well, I'm in the same boat as you. I must say that, this week I definitely scaled back on my bullishness. I think we are working off that very key resistance level of 6,000. I know today it looks like a nice little bounce off that 20, but again, this can easily get erased by Monday. So I think we definitely hit a key resistance level in the markets. So I personally think we could go sideways a little bit here. But I'd rather look for this breakout of that 6,000 to get bullish again. But I think we could sort of go sideways a little bit here, or maybe pull back. The one of the things that we did talk about was this rising bond yields, and I think that's the one thing that we have seen it over and over again that has affected the markets. Last week, we had some pretty bad auction, and that caused the markets to sell off. If the yield continue to rise, I think that would continue to weigh down on these broader markets. So that's really what I think. But at the same time, like you said, you know, is that priced into the markets or is it not? And I don't think it's that fully priced in. And that's the one thing that will probably be our topic of discussion in the coming weeks ahead. So I have scaled back on my bullishness. Doesn't mean I'm bearish, but I'm just like, this is where risk to reward, I think, is getting a little neutral here. So maybe we can go range bound back and forth, but definitely scaling back on that little bullishness there.
Thanks, Ankit. And you're right about these bond yields. The equities did not like it when it hit 4.6. Did not like it whatsoever this week, which is the big reason why we saw that sell-off. Let's go back and take a look at what Forex did. And outside of the dollar, and a big chunk of this came on Friday, but I want to point out this. This is bad price action. This is not a big enough set of numbers to make any meaningful money. Now, if you're out there scalping and trying to get 5, 10 pips a trade, okay, you can trade this market. If you're out there trying to wait for high base breakouts and hold on for 3 days and get 100, 200 pips, you aren't doing that because it's not happening. And if you're trying to make it happen, it's going to be very, very frustrating. In my videos I do on Tuesday the last 2 weeks, I've said it's just not there. I'd rather be playing in the crypto market where there's actually movement than in Forex. And you can see here, decent movement by the end of the week. These were up a little bit more, probably 5, 6, 7% earlier before a little pullback. But to me, the crypto market looks like this is where the action is. And Forex just doesn't look great right now. And I'm going to go back to what I said in the very beginning. Fully accept and embrace the market in front of you. Stop trying to be a swing trader and get big breakout moves off of high bases in markets where that's not happening. Don't expect it to happen when it's not happening. It's why we do our trend scores. It's why we do all of what we do, is to determine, this is the kind of market. There's very few things that are +3 at the moment, so I'm not going to trade all that much. We already took a look at bonds. Let's take a look at crypto basket. Just a beautiful little base here, breakout higher, little pullback. And this is where I talked about trading these bases here. And if you remember, I said I like taking positions at the bottom of these levels. So when they do break out, you've got a really nice cost basis. You can grab a little bit more up here, but it's very comfortable when you get one of these candles. If you got in on yesterday's candle, today's candle sucked. It sucked. And frankly, you might have even gotten stopped out at the bottom. But if you had identified the base and been nibbling here, nibbling down here, all of a sudden, you're not all that worried because you're still either break even or slightly positive. It's a more comfortable place to be. So we'll look at all the cryptos here. I still think crypto is a place to be for trading, and I don't think Forex is the place to be. Next week, we do have some big news out of Aussie and Kiwi here the first day of Tuesday. One thing to note, on Monday, the US markets are closed. The European markets are closed for a bank holiday. So don't expect there to be great trading until Tuesday, and maybe even until Tuesday night, where we get these reports kicked off. So Aussie CPI going to be important, but this RBNZ, they're looking to cut rates as well. The RBNZ has been one of the most dovish central banks, which is why the Kiwi has been one of the weakest currencies. Well, we'll have to wait and see what they say as they cut another 25 basis points going forward. Other than that, the only thing I see of any note here is the US Core PCE Price Index, and I don't even think this is important. Inflation has not been an important thing lately. And in fact, all of our inflations that we've been getting have been lower than expected. If this one comes out higher than expected, the market's going to look at all the other ones that came in lower than expected and said, okay, we need to see more data before we react to this one. So I don't even think this core PCE is a big one. And if it comes out weak, that's going to mean that the Fed is likely to cut rates, which means that that dollar is probably likely to go lower, which is one of my favorite trades for the week, which is a short dollar trade. So really the only central bank we have this week is the RBNZ on Tuesday. Let's go through all of the currencies, look at the trend score and velocity score. And remember, this is why we do it. This is why we develop this strategy of trend and velocity score. And when there's nothing trending, you don't want to trade a lot because there's no extended moves. And when things are trending a lot, that's when you want to be active in your trading. So we're going to go through and we're going to identify what's trending. And if something's trending, all of a sudden it's like, hey, we can trade this week. But what's the velocity? What's it doing right now? Bitcoin, great chart. Just a beautiful chart, high base, breakout, high base, breakout, beautiful chart. Okay, at this point, we just had a breakout out of a base. We have a red candle here, probably telling us that we've got either a base forming here or a pullback. It's going to be one of the two. I think 108 is that nibble point. Anytime it gets down to that 108 now, hey, let's maybe look to acquire. If this is what you want to do and get into crypto, start nibbling here on this. And then when it finally does break out to the upside, then you're going to have a nice cost basis up on top. But I don't really love nibbling right here, right after it's made a new swing high, because that's like starting to nibble back here. Like you start to nibble. Do you see how long you had to wait for anything to happen? You had to wait like 2.5 weeks. I don't think you want to start nibbling here. I think maybe by the end of the week, if we've gone sideways up here, but I wouldn't nibble now. It's just not the right time to do it. So Bitcoin looks great on the trend, but not for timing. Bitcoin Cash, on the other hand, looks much better, and we've actually seen a little bit of a breakout. Okay, it's a decent entry here. We'll take a look at this one on a shorter term chart for a possible entry, but Bitcoin Cash is definitely in play. Ethereum, it's basing here. Now this is where I like this as a point to start to nibble. Look how long it's been basing. It's been sitting here. When it comes down to the bottom end of this range, hey, let's grab a little bit so when it does break out, we can take another position on the breakout, and then if it fails, we're not in a horrible situation. We're just in a not so great situation to where we have to wait for it to go a little bit more. We'll take a look at Ethereum as well when we get to looking at individual trades. Litecoin had a pullback. When you have similar assets and two of them did bases and one did a pullback, it's telling you the one that did the pullback is weak. So I'm not interested in Litecoin. I'd rather chase after Bitcoin Cash or into Ethereum. Ankit, will you take us through Forex?
Absolutely. Let's just start with the US dollar. And I think this is the only currency, like Rob said, is moving. So, I mean, no, we are getting a trend sort of a -3,
But you got to keep in mind is that we are at the lower level of that base here. So we established a base, like the low that we established last month. We kind of touching that again. So again, we don't have a confirmed breakout yet. And I think that's really where we are in a lot of the currencies. We are hitting these support and resistance levels. We're just not really breaking through it. And we'll take a look at other currencies too. But right now, again, everything is pointing out this is the currency that's moving. But again, I think we're gonna, look for a follow through, a confirmation candle. If it's a true break, that we need to see that break below that. So we'll see what happens next week. But definitely, this is the one that has that negative momentum. Now, when we start looking at other currencies, and you'll see it's pretty clear how things are moving. Like look at the yen. Trend score is mostly flat. And I always emphasize, and like Rob said earlier, these trend scores are important because it really tells you, okay, how aggressive that price movement is. And if things are going sideways, then you know that the trades are not going to work out on that multiple day time frame. We're getting volatility, we're getting intraday movements, but for continuity and for that continuation pattern, you need that trend score to get better. So trend score is 0 here, velocity is also kind of mixed here. So yen definitely is not the currency in play here. Now, when we go into euro, you can see the euro is also flatlining as well. So it's the same thing, not a good aggressive score, back and forth. And now when we go into Swiss franc, it's the exact same thing. Swiss franc is also going sideways. It's, the trend score, just keep a close eye on this trend score. It's a 0. There's more velocity in the euro today. And that's because we had this, this Trump's tweet this morning about the tariff against the eurozone for 50%. So that immediately started this rate cut bets for the ECB. And that's why we're seeing the negative velocity today for this euro. So going into next week, if I want to take a look at a potential breakdown, I think the one thing I'll be looking for is the euro. Does this news, leads into more weakness? So that's something we're going to pay attention to next week. So a lot of the euro crosses that I'll be paying close attention to. Now, when we go into the pound, this pound thing, like, it's a +3, but it's a slow creeping, moving higher. So again, whenever I see this, I only want to trade it one way, which is on the bullish side. When you have those negative days, just like the day we have today, where velocity is a -2, it's a good signal that, hey, today's not the day to be on the bullish side. But I'm not looking for pound to be on the bearish side. I think this is pretty much a one-way, slowly creeping higher sort of a trade here. Now, when we go into the other growth currencies, look at CAD. Overall, not going anywhere. And CAD also has kind of deviated from its, correlation with the USD here, I must say. Where dollar had that big, sell-off, we're not really seeing that in the CAD here. So CAD is kind of drifting sideways as well. So getting good movements, if you take a look at intraday, a couple of up days, couple of down days, but that's pretty much it. That's the pattern here. So if you're looking for trades, I think they're good setups that I'm finding on hourly charts. But the problem is the continuity. It's not leading into the next day. But intraday movements, like I said, is there. Look at Aussie right now. Even Aussie, same thing. The cut rates, it did have some downward pressure. But, overall, if you look at grand scheme of things, it's not really moving higher or lower. So this is the problem that we are seeing in a lot of things. We got a support level here. I don't have a strong call. So whenever I see this, it's just a good indication that, hey, take a look at it on a velocity. When you're getting a good velocity, you want to be, playing that a little bit on the upside. But that's pretty much it. I don't have a big call on the trend here. Same thing. Look at Kiwi here. We are drifting sideways for now almost 2 months. Like it's a month and a half that we're just drifting sideways. But you can see that each time we get towards those bottom support and resistance levels, those are convincing patterns. And I think that's really what's frustrating, because you look at this on a daily chart and then you look at a 4-hour chart, you look like, oh, this is going to break down, and boom, it just turns around. Kiwi is a good example. Yesterday, all day, it was pretty weak. So you would think that closing the lows of the day, we're going to continue going down. And here we are today, almost reversing that. So that's really where we are. So I think whenever I see a range of price action, I'm not playing the breakouts. I'm more playing within that range, respecting the support and resistance level. When is it going to change? Who knows? But and when we get that change, those trend scores will reflect it. But I think till then, it's pretty safe to play on that range bar price action by changing your time frame down to maybe an hourly chart. I think it would work better.
Or just don't trade. Look, if that's not your thing, I don't want you to deviate from your system just to try to match what's happening in the market right now. If you have a system that's already pre-built for these kind of markets, okay, great. Trade that system. But if you're going to try to just change on the fly to fit the current market condition, no. You're much better off just sitting out and waiting for conditions to match what you would like. Trade the market in front of you. Here we are. It's crystal clear. You've got pound and dollar. And look, that pound trend was about the weakest plus three I have ever seen. So I don't even love that pound. The dollar to me is the best trade out here. The dollar short, that's the trade. Other than crypto. I think crypto is, again, a very viable place to be looking for while we're waiting for Forex to make a little bit of a change and become trending again. What's the velocity going right now? Well, we got Aussie Kiwi bouncing off their lows. We'll see if that has any continuity to it. We do have euro and dollar. Ankit, I'm also with you on that euro short. I don't think it's ready yet, but if it does break, I think that euro short could be good. And just for any of you who are looking to trade the yen, if the euro and dollar sell off, the yen will likely be the major beneficiary. Remember, when currencies go down in value, currencies is the zero-sum game. You can't sell euro without buying another currency. You can't sell euro and go to cash. Euro is cash. So you have to go to another cash. So if euro and dollar both go down next week, I can only see the money going into the yen and the Swiss franc. Ankit, would you agree with that?
Yeah, I mean, I agree. I mean, I think that's the hardest part. As you look at pairs. Okay, what do I pair, and what's the best pairing? And I think that's where I totally agree. I mean, that's really where we are in the markets, and I think you guys have to get those better trending scores to really look for that continuation. But dollar is the one that's moving. If the euro is the one that's moving next week, then want to take a look at euro across the board against everything else, because that's the primary currency that's going to be moving.
All right, well, let's go ahead and take a look at some of those crosses. I'm going to start in crypto because, as I said, I think it's the better place to be. If you're looking for those multi-day moves, we'll be at multi-days like we saw here on Bitcoin. We'll be at 3 days where, again, we didn't have any big long lower shadows. We were closing up near the high. These are the kind of moves we like to grab. As I said earlier, Bitcoin, look, it's peaked out. At least this candle's telling you it's peaked out. I don't like it as much as others. Bitcoin Cash, on the other hand, already had this little, let's call it a cup and handle little thing here. Now we've got this move higher here. The question is, where is the entry here? The belief is that this is going to make a new swing high, maybe up here at 480. That's going to give us 10% upside here on this one. So the big question is, on shorter time frames, where's our entry? Where's our entry here? You can see we got an 8-hour pullback, got a little green candle. We'll have to see what happens here. This is on Friday. I'm not taking any trades on Friday. Bitcoin and Bitcoin Cash is going to trade through the weekend. So I really need to come back on Sunday or even Monday to see what the candles are like. So I really can't comment on anything because we are going to have 3 more candles before we can actually trade it, which could drastically change everything. But I'm looking here at Bitcoin Cash. I'm looking here at Ethereum. And on Ethereum, I want to be a nibbler down at like 2,500. 2,500 is a great little place to start nibbling here as we wait for it to base and likely break out to the upside. If it does break out to the upside and you've nibbled a little bit down at 2,500, then you can double up and have a much better cost basis than if you just bought the breakout at 27.30 and then it fails and then it's a painful trade to be in. So these are the two that I like and I think look the best. I'm going to pair up pound dollar just because that's where the trend scores are telling me to go and telling me to hunt. And if you look at a daily chart, you can see there's a lot of reasons to like pound dollar to the upside. And we start to take a look at some potential targets here on this. I don't want to get too optimistic on targets here. You can see, I mean, we could make it up into the 136, 137 area over the next couple weeks or the next couple days. But this is where, when the rest of the market is trendless, to think that this is going to buck the trend, which it is at the moment, but it's more likely to match the market than the market is to match it. I think this has moderate upside. I wouldn't go much past 136.20, 136.30. I want to get all this optimistic all the way up to here. I don't think that's the market we're in. I think you have to be very realistic with targets when you have a market that's not going very far. Ankit, that's the one I'm going to look at. What do you want to take a look at?
Hey, Rob, I'm in the same boat. Like pound dollar, I think was only one looks better. So really, the next week, the question really come here is that, okay, we see everything is range bound. So we do want to see what the euro is going to do. But I think the big question is that what's the dollar going to do next week? Is the dollars going to break out, or is the dollars going to reverse back off that range? I think that's the main question here. And a lot of the pairs you can find, like take a look at Aussie dollar, take a look at dollar CAD. A lot of these things are at that support and resistance level. So here's you're looking at the Aussie dollar, and you can see that it's right at the resistance, and that's exactly what the dollar basket is. Rob, take a look at dollar CAD. Same thing. Dollar CAD is trading between that 137.50 to 140. Looks like it's a breakdown. Now, real question, like I said, is, or the next big opportunity is that the continuity of it. So I want to see a confirmed sort of a breakdown, like continue to see that in next week. If this is a true break it down for the dollar, and I think we can take a look at a lot of dollar per pairs and kind of give you a very similar setup. Now, I think that's really where I'm at. Now, when I take a look at other currencies, well, until they give me a better score, I think, like you said earlier, either you stay out or you lower that time frame. If you tested a strategy, then that's great. But right now, I think dollar is the only one that's moving. We'll take a look at euro next week. But that's really my outlook here. I think it's better to keep the powder dry, and not trade too many trades, but then just keep an eye on what currencies in play. That's just a way how you can conquer these markets right now until the direction change in the markets. But back to you, Rob.
The phrase of the day is trade the market in front of you. We would all love for the markets to be good and to be active and to be trending. That would be wonderful if they did it. And in fact, this is where professionals really stand apart from the amateurs, because amateurs are going to be clicking buttons. They're going to be clicking buttons, spinning their wheels. And what they're going to do is they're going to be giving back their profits from when the markets were trending, when they were great. They thought, hey, I'm so smart, I'm making all this money. No, it's just because you were employing a trend trading system during a trend. Now that we're trendless, they keep trying to hit their head up against that wall and they can't figure out why it's painful. Well, the market has changed. Until this market changes back, it's really best if you don't do any trend following strategies. If you've got a sideways strategy, trade it. If you don't, sit on your hands or go to a market that is trading, which is the crypto market. That is it for the Currency Room. Everyone have a great long weekend. Remember, equity markets are closed on Monday in the US and Europe. Forex will be open, but not all that active. So please adjust everything accordingly. Everyone have a great, safe weekend. Goodbye, everyone.